And welcome back. It's Jason Walty here. I noticed that Freddie Mac just a couple days ago announced their latest housing market predictions through 2023. They provide their predictions for home sales, mortgage rates, as well as home prices again through next year. So some very interesting trends they're sharing here. And hint, they're predicting that home prices are going to be down on a year-over-year basis next year. But of course, more on that here in just a little bit. But let's go ahead and dive right in because I have a lot to share, of course. This was actually just announced on the 21st of October, just a few days ago at the time of this video. It says here, and this is something I want to kind of squash right away. It says the current deceleration of the housing market, given declining demand, is likely to continue. I don't know about you, but I think this this term here, deceleration, has been overused. Deceleration to me means that the housing market's still going up, but not at the levels we once saw earlier this year. I think most of us would agree that this housing market is actually slowing down and not having any deceleration of our housing market. So comment below if you guys agree with that our housing market's actually slowing down and not decelerating. Anyways, it says here in their new quarterly forecast, again, this is according to Freddie Mac here, the company's chief economist points to mortgage rates that have more than doubled in the last year as a key driver regarding this slowdown in our housing market. And according to Freddie Mac's chief economist, here's what he had to say. Mortgage rates have increased at the fastest rate in 4 decades, quickly taking the wind out of the sails of this housing market. The rise in rates has created affordability challenges, like I've been talking about for so long on this channel here. It has created affordability challenges that have forestalled or put to a halt many consumers' decisions to buy a house. And he goes on to say the following here. We expect a gradual increase in the supply of houses available for sale. In other words, an increase in the number of houses for sale across the United States here as compared to historically low levels last year. So I actually 100% agree with him regarding this because based on the current data we have right now, we're not seeing this giant increase in inventory compared to 1 year ago. It is increasing though, but not increasing at the rates we once saw at the beginning of this year. And one reason for that is this right here, because we're not seeing enough new listings hitting the market compared to 1 year ago. I went over this in a separate video from yesterday or the day before. So not going to go over this in great detail here, but it's worth mentioning again because the reason why we're not seeing inventory increase at the levels we saw at the beginning of this year is because the number of new listings has been decreasing compared to 2021 for several months now. So really ever since, let's just call it June of this year or June and July of this year, we've had fewer new listings hitting the market compared to 2021. And in fact, the most recent trends we have right now is down by 18.5% on a year-over-year basis. And by the way, that's the biggest decrease we've had so far this year. So when Freddie Mac says we expect a gradual increase in the supply of houses for sale, I also believe this as well, because even though we're seeing fewer new listings hitting the market for the past several months now, inventory has still been increasing. However, if the number of new listings were absolutely skyrocketing, this would cause inventory to increase greatly as well, which would cause our housing market to slow down even further than it already is. But again, based on the data we have right now, that is not happening just yet. In regards to their quote that we have historically low inventory, yes, it's actually absolutely true. Take a look at this. This is on Uncle Fred's website for Realtor.com. The source here is Realtor.com. Anytime you guys look at Fred's website or their graphs, their source is at the bottom of the graph here. So Realtor.com is the source right here. So right now, at least for September, we have approximately 732,000 houses for sale compared to, I believe this might have been the all-time record low, or at least going back to 2016. Inventory was at 347 houses for sale, or 347 houses for sale back in February 2022. In other words, inventory has more than doubled since February of 2022. And because inventory has more than doubled since February of this year, this is causing our housing market to slow down greatly. Even though the levels we have right now are far below historical levels for inventory. Because back in July 2016, let's just call it, what is this, September 2016? So September 2016, we had 1.4 million houses for sale, and now we have just over 700,000. Back in September 2017, we had approximately 1.3 million. Back in 2018, it was around 1.3 million as well. 2019, at this time, also around 1.2 million. So to be honest with you guys, I actually thought we had to get to levels of inventory like we once saw pre-COVID. But because inventory got to such low levels back in February 2022 and has absolutely skyrocketed ever since then, that's one reason why our housing market's slowing down so much. In any case, let's get back to Freddie Mac's housing market forecast here regarding mortgage rates, home sales, as well as home prices here as well. They talk about the rise in rates, though, is one of the reasons why they're actually downgraded their housing market forecast here. It says here the average 30-year fixed rate mortgage was 6.94% as of the week of October 20th this year, up by 3.85 percentage points from 1 year ago. If you guys follow the channel, you guys know that I do not like their weekly survey here because it doesn't share what actual rates are today. And I'll share actual rates here with you guys here in just a little bit. But they have some really good insights regarding this giant increase in rates and how that's impacting our housing market here. It says this survey here, which is a weekly survey regarding average rates across the United States, which, by the way, dates back to April 1971. Rates have only increased faster than they are today back in 1980 and 1981. So mortgage rates have only increased faster in 1980 and 1981 compared to right now. However, in 1980 and also 1981, rates averaged 16% and 18% respectively. I can't even imagine rates being at 16% for the average 30-year fix when rates right now are approximately 7%. Also, just 1 year ago, rates were just under 3%. Rates were actually under 3% back in January 2021, but also August of 2021 as well. This means that while mortgage rates are not as high as they once were in the 1980s, they have more than doubled in the past year. And have a look at this. Rates have never doubled in a year before. How mind-blowing is that? Therefore, it should not be surprised that our housing market is actually slowing down, right? So let me give you an update regarding rates right now, and then we'll share their forecast here. So take a look at these rates, absolutely insane. So the average 30-year fix is at 7.15%. The year-to-date high, which by the way was a 22-year high, or 20 to 22-year high, was 7.37%. That was set just a couple of days ago. But the average 30-year fix, 7.15%. Going back 1 year, rates were at 3.27%. That's an increase by 3.88 percentage points in one single year, which is absolutely insane. Also going back to April 1st of this year, the average 30-year fix was at 5.05%. So in other words, rates have increased over 2 percentage points since August 1st of this year. On top of that, rates have more than doubled over the past year because 1 year ago, rates were just under 3.3% and now they're 7.15%. Absolutely insane how fast rates have risen. And also, according to Investopedia.com, as of today, which is the 25th, average rates for people with exceptional credit, of course, is 7.42%. And here's their housing market forecast through 2023. They provide numbers regarding 2021 and also their forecast for 2022 as well as 2023. So this right here means the average 30-year fix, according to their weekly survey here. The average in 2021 and also I believe in 2020 was around 3%. So 3% for 2021 and probably 2020 as well. The average is going to be 5.4%. They're predicting this year. And this, by the way, is so low given the fact that rates were approximately 3.3% to start this year. So on average for the year, they're forecasting for rates to be 5.4%. But look at 2023. 6.4% is going to be their average, or what they're forecasting to be their average next year. They also provide their forecast for total home sales. Total home sales includes brand new home sales as well as existing home sales. Look at this, 6.9 million in 2021, then it decreased by 1.1 million. And by the way, that's down by 16% on a year-over-year basis, down to 5.8 million in 2022. Again, that's down by 16% compared to 2021. Then their forecast for 2023 is calling for 5.1 million total home sales. That's down by 12% from 2022. Look at this big change though, from 2021 to 2023, that's down by 26%. And this, of course, is due to a fallout in home buying demand due to rising rates. And I would love to hear from you guys regarding this. What do you guys think about their forecast here for 5.1 million? Again, down by 12% compared to this year. In my personal opinion, this seems a little bit low, or actually a little bit high, I should say, given the fact that we're basically going to be starting the year with rates above 7%, very likely in 2023. So I wouldn't be surprised if we actually had less than 5 million home sales in 2023, given the fact that rates are going to be over 7% to start the year in 2023, when rates were averaging 5.4% in 2022. But of course, as you guys all know, I'm not a real estate market fortune teller, and my crystal ball broke a long time ago. So that's just my thoughts regarding that. Only a guess, right? Pure speculation. Here's home price growth. This is very interesting as well, and what a turnaround 3 years makes. Look at 2021. Home price growth, or home prices increased by 17.8% compared to 2020. 2022, they're calling for home prices to increase by 6.7% this year. Then in 2023, they're calling for home prices to decrease by 0.2%. And again, if I had to guess, I think this is a little bit too low, in my opinion, because rates right now are about 7%. Again, the average 30-year fix, the forecast or the projected number here is 5.4%. I don't think there's a lot of people who think that rates are actually going to be decreasing in 2023. As you can see right here, they're forecasting for rates to be 1 percentage point higher compared to 2022. And we're already seeing a huge pullback in our housing market here, given the fact that rates are already at 7%, actually over 7%. So to say that home price growth is basically going to be flat this year or in 2023 to 2022, I think it's a little bit bullish. But of course, comment below what you guys think about this forecast here. They also provide some insights or their forecast for total mortgage originations. This includes home purchases plus refis. So look at these giant numbers. 2021 was a crazy year. Look at home prices increasing by 18%. And also total mortgage originations were more or less $4.8 billion, which includes purchases plus refis. And their projection this year is going to be just under $2.6 trillion. That's a big decrease from $4.8 trillion in 2021. But look at 2023 though, $1.9 trillion. So in 2 years, they went from $4.8 trillion down to $1.9 trillion. In other words, that's a decrease of 60% over the past 2 years. And one thing I want to mention regarding this big decrease, again, down by 60% in the next 2 years, or through 2023, I should say. Obviously, we're seeing a huge decrease in refis, given the fact that rates have more than doubled over the past year. Freddie Mac also stated the following regarding their latest real estate market predictions. As housing market activity continues to contract, we expect that will lead to a continued increase in the month supply of houses for sale from historically low levels last year. So they're forecasting for the month supply to actually increase. And here's the latest trends we have from Uncle Fred here. The source here is the National Association of Realtors. The month supply right now, at least for September, this was just released about a few weeks ago. The month supply is 3.2 months. The significance regarding this is that 1 year ago, the month supply was 2.4 months. But wait, there's more, because the all-time record low, I believe this is all-time record low, was 1.6 months that was set in January 2022. In other words, in 1, 2, 3, 4, 5, 6 months, the month supply actually doubled in the US. In other words, the month supply went from 1.6 months, and 6 months later, it increased to 3.2 months. I mention this because Freddie Mac believes, and I also believe this as well, that the month supply is going to gradually increase next year here. It says here the loosening of the once incredibly tight housing inventory removes the intense upward pressure on home prices over the past 2 years. Of course, because we had a lack of houses for sale for the past couple of years, that causes a huge increase in home prices across the United States. While fewer home sales are increasing the month supply, that is partially offset by fewer new listings as high mortgage rates de-incentivize people from listing their houses for sale, which I've been talking about on the channel for quite some time. And check this out. They say home prices increased by about 40% compared to 2020. So even though home prices have decreased by about 6% from the highs we saw this year, home prices are still up by about 40% compared to 2020. Obviously, it's lower in some markets and much higher in other markets, such as Boise, Idaho, for example. But it says here the spike in mortgage rates have caused a correction in home prices. We expect house prices to decline modestly, but the downside risks are elevated. In other words, there's a lot of risk here in their forecast here, and it could cause home prices to decline even further than what they're expecting here. It says here, as the labor market cools off, housing demand will remain very weak in 2023, potentially resulting in declines in prices next year. However, home price forecast uncertainty is very wide due to interest rate volatility and the potential for recession on the horizon. What they're saying right here is that it's very challenging to predict our housing market given the fact that rates have been so volatile this year. It's a very challenging market here, to say the least. And of course, it's very hard to guess how many people are going to be listing their houses for sale, which makes it, of course, very challenging to predict our housing market here. But what are your thoughts regarding their latest housing market forecast here? Please leave me a comment below. Also, if you guys got any value in this video whatsoever, then please hit the like button and greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.